All right, guys, what is going on? What is Gucci? Sorry for the late start today. Y'all ever hop on the phone with somebody and they can just yap, you know? Y'all ever been on the phone with somebody that can yap, dude? Yep. So, and then I had to restart my computer as well. So, sorry. Sorry, chat. Sorry. All right, 17 people. Let's go. Let's go. What's good, Mark? 2020, Roberto, Scott, Kill, Slowly, Julius, Johnny. Man, I don't even know how to say your name. Die. Crazy. Crazy. So, y'all already know we got the presentation today. Oh, shit. Feedback loops. Okay. It's not going to be the funnest presentation. You know, it's definitely not my favorite or anywhere near it, but it's still good information. Still going to be good information. Jorks. I forgot how to say your name. IMM. You guys got to get some regular fucking names, dude. Like, damn. You need some regular names in here. All right. Feedback loops. Drop a one in the chat if you guys are ready to go. Let's see if we can jiggle the algorithm a little bit. Get some comments going, get some likes going. You guys never like it. You gotta like the stream. You gotta comment. Bruce, appreciate you. All right, now we got a little bit more. Thank you, Roberto. All right, so feedback loops. What is that? So a feedback loop is a process where the output of a system is circled back and used as input, influencing future actions or behavior. It creates a continuous cycle of action, response, and adjustment, acting as a self-correcting mechanism to improve products, maintain stability, or amplify results. Now, obviously, we're not trying to improve products. This isn't a business class. But that last part, right? Amplify results. So I feel like a lot of people don't know how to optimize their results. I think some people, and this might be you. I know it was me at one point, but I might have to hold on. I might need to decrease my webcam again like yesterday. Some people might continue trading and they never learn to optimize their results. So if they're trading one way and it's not going well, they try a different way or different model, different strategy, whatever, different risk management, yada, yada. And people that constantly change what they're doing are never going to see consistent results because what you're doing is constantly changing, right? Now, the difference is, what we're going to talk about today is getting into specifics and not staying in that loop of just moving around and never actually sticking to something. All right. Trading analytics are potential feedback loops. To ignore feedback loops is to ignore improvements. If you don't know where you're struggling at, you're not going to improve because you're not going to fix what needs improvement. The feedback loop holding you back the most is called the bottleneck. Okay. Y'all know what a bottleneck is, right? You ever seen a Coke bottle or let's say like an Icelandic bottle, right? Not paid sponsorship. But you see how the bottle comes to the tiniest part, right? It's wide down here, like your mom, and then it gets skinnier and then at the top right here. So it's bottlenecked right there at the top. So the water, right? If I were to take this, well, I'm not going to do it, but if I took this water and dumped it out, right? You notice how water doesn't just fall out. In any type of container like that, the water or the Coke doesn't just fall out. It like slowly does it because it's bottlenecked, okay? And again, somewhere in the realm of your results, you're going to have a bottleneck. And that is what you need to find. And how would that be beneficial? Because you fix your bottleneck, or at least you improve your bottleneck, you optimize it, and your results will skyrocket. All right, I mentioned it. I mentioned this the other day. There's like two different types of feedback loops as far as like the timing of it. You have leading feedback loops, which is the process variables you control before and during the trade, so pre-trade and during the trade. And then you have lagging feedback loops, the performance outcomes that show whether that process is working or not. So drop a 2 if you guys understand the difference. It's fairly self-explanatory. Leading feedback loops, variables you control before the trade and during the trade, right? We control, you know, certain things, where we put our entries, where we put our limits, how much we want to, you know, put leverage on, or position size, whatever, which asset specifically, all that. That stuff is leading. The lagging feedback is like, hey, was that a winning trade? Was that a losing trade? Was that a break-even trade? And we won't know the outcome until that trade is closed, obviously. But there it is. You have leading feedback loops and you have lagging feedback loops. All right, so I'll go over there's quite a lot, but we're going to go over some feedback loop examples. So the very first one, a lot of people are sort of obsessed with, is the win rate, right? Which would be a lagging feedback loop, because again, we don't know until it's closed. And your win rate obviously is the percentage of trades that are profitable. How many trades out of 100, or how many trades out of 1,000, or whatever. You have your profit factor. You can find this on Top Step X as well, the Top Step X platform. Your profit factor, gross profits divided by gross losses. So if you're at a 1.0, that means you're at break even. Make 1,000, lose 1,000, 1.0. It's break even. If it's above, or excuse me, if it's below less than 1, that's unprofitable. You made 1,000 but lost 2,000. That's less than 1. That's unprofitable. Anything greater than 1 is profitable. Like if you have a profit factor of 2, that means if you lost 1,000, you made 2,000, I think. Right? So it's a simple number. It's either going to be 1.0 or better, or 1.0 or worse. You have, this is probably, you know, something that most people pay attention to as well, RR, your risk reward, or triple R risk reward ratio. You can actually have a negative RR. I see a couple people on Twitter that boast about having a negative RR, but whatever works, I guess. You can have 1-to-1s, 1-to-2, 1-to-3, so on and so forth. Now this, again, this one is hard to quantify, because if you're taking partials, that's going to water down your RR. If you're taking like specifically the inversion model, which is 1-to-2s, okay, you're going to be at a 1-to-2 or less probably. Now, if you're, say, trading the low risk buy or the first leg of a market maker model, your RR is probably going to be higher, like a 1-to-3. So your RR numbers will be mixed and not accurate if you're trading with different models. You're using, let's say, the low risk buy, and you're also trading the second leg. Like, that's, RR is not going to be accurate. But still, if you take the same RR, then you'll have an idea there. Your risk percentage, 0.5%, 1%, 1.5%, or 2%, or something greater than that. I would be careful. I would not go above 2% per trade unless you really know what you're doing. But, you know, there's a feedback loop there. Trade frequency, that's your number of trades taken. You have types, your like the types of trades. I know I talked about this extensively the last couple weeks, right? You have the reversal trader, that V-shaped reversal, you want to be in that, or the A-shaped reversal, you want to be in that, or you could be a continuation trader. You might like the first leg accumulation or distribution, or the second leg accumulation distribution. You might like continuations more. You might like reversals more. Maybe you like both. I don't know. But these are the kinds of things that you have to look at. And I think most of us do start out as a reversal trader. This is just me guessing. This is pure speculation. But I do think a lot of us start out as reversal traders. We try to catch the low or try to catch the high, or, you know, whatever. But either way, are you a reversal trader or are you a continuation trader? Maybe you're a better continuation trader than you are a reversal trader, or the inverse of that. You have type of trader, you know, as far as like the length of time and the time frame that you're trading. You could be a scalper, you could be a swing trader, or a position trader. Stocks, options, really good for position trading. Forex, index futures, really good for scalping and swinging. You have day of the week, Monday through Friday. Okay. And you'll know if you look at all of your Mondays, you look at all of your Tuesdays, so on and so forth, you might realize that Friday has the worst, like Friday's your least performing day, you know, or maybe it's a Wednesday for some reason, like, you don't know, but that's something you have to look at. You also have the session, right? Which times are you trading? London, pre-market, AM, lunch, PM, so on and so forth. Asia, whatever. Your asset type, indices, stocks, FX, metals, etc. You know, you might have a much higher win rate on indices than you do in FX. So you may want to focus a little bit more on indices than you do FX. Or maybe metals. Maybe you really like gold and you're not so great at the others. Well, then that's where your focus goes. You have, I would say personally, your stop loss size, right? You have small, medium, and large stop loss, and obviously that's relative. So this is, again, it's a little hard to quantify something like this, but I've seen it time and time again when people show me their charts with the RR tool on it or whatever, or the entries on it. And a lot of the times I do see that the stop loss is too small. I hardly ever see traders with too large of a stop. It does happen, but it's usually more of a tighter stop because you're trying to go for that really high RR. So again, it's another tool to look at, another feedback loop to look at. Another feedback loop, what do you target? Y'all know what I like to do. Y'all know what my favorite target is. You could have a fixed RR. Some of the models do require that. You have previous day high or previous day low. And of course, my favorite is going to be the equal highs or the equal lows. Original consolidation of a market maker buy or sell model. That's my favorite. I love that. I love that. I love it. I love it. Yesterday and recently, I've been sharing this idea of framing two different pools, right? One pool on regular trading hours and another pool on electronic. And when they're in close proximity, ooh, that's what you want right there. That I like. I'm much better at that than I am, you know, looking for previous day high or low. Or sometimes this might even be the same. You might have equal highs at yesterday's high or equal lows at yesterday's low. You know, it's just, what is your target? What are you better at targeting? You also, I know it's a lot. I told you, there's also time frame alignment. You might stick too much on intraday and not focus on the daily or weekly. That's going to chop you up. Or maybe you focus a lot on the daily and don't really do much intraday. You're not going to take many trades, but again, it's just another feedback loop. Or maybe you look at your trades at all your, you know, the last 40, 50, 60 trades, whatever, and you look at your journal or you look at your charts and stuff and you go, okay, These losses were because I didn't look at the daily, or I didn't look at the weekly, didn't see the higher time frame, and that's a misalignment. So that's a feedback loop, time frame misalignment. I actually meant to delete this one, but this you'll find in the TopStepX platform as well. The trade duration, that's how long you hold trades. So could be a few minutes, could be a few hours, could be a few days, whatever. You have execution-based feedback loops, right? And Trading in the Zone talks a lot about this. Disciplined Trader by Mark Douglas also talks a lot about this. You have entries like FOMO, right? Fear of missing out, just taking random entries. Revenge trading, trying to get your losses back. Exiting early. Can y'all see that? Yeah. Exiting a trade early or widening your stop loss. That's one of the worst things you can do. Hesitation to enter, etc. You know? So these are all like execution based feedback loops. Maybe you have one problem and not another. You know, maybe you don't mind getting in trades, you have no issue, but your issue is moving your stop loss away, like not reducing risk, you're increasing risk. That's a feedback loop. Or maybe you know what you're doing, but you're hesitating to enter. That's a problem. You know? All right, we're pretty much near the end of it. So what do we do? What do we do with all this information? I just gave you a bunch of feedback loops to look at, bunch of analytics to look at, okay? You have to take a look. You have to take a look at your analytics, which is your results, okay? Whatever those results are. You have to take a look at your journal, okay? If I look at a trade from 6 months ago, or let's say 2 years ago, I don't know what was going through my mind at that time. Okay. Now, if I look at a chart and it's highlighted, this is a daily imbalance down here, this is a turtle soup, this is a buy model, then I'll know, like, okay, I know what I base the trade off of. But if you're lacking some information, especially the details, like how you felt about it, you know, what you thought, all that, you're going to be missing information. So you have to take a look at your journal. You need to see where you need improvement. Where do you need improvement? You got to see what works well and what doesn't. Okay? I know targeting equal highs after manipulation lower, I know that works well. If we have manipulation at the highs and we have a turtle soup at the highs and a divergence at the highs and we've got equal lows, I know what works well is me aiming for those lows, right? And what doesn't? Trying to, let's say, long with equal lows, and we just had manipulation. Longing after that, you're cooked, right? So you have to see what works and what doesn't. I just went over, I think yesterday, we went over framework a lot. And I was telling you, look, as wherever you're trading, as long as it's part of a framework, you're going to be fine. You remember we talked about the Dow Jones yesterday? Right? Oh, where is she at? Where is she at? Didn't we say we shouldn't make a low here? There's no reason to make a low. New low of day right there in the final hour. Weird. Right at 2:30. Right in between that macro, right? 215 to 245. Yeah, that doesn't exist. And then today we opened and then slammed for Monday's low. Another one. And then we actually did go to Thursday's low today. But remember, we were framing shorts yesterday. There was nothing fucking bullish about yesterday at all. At all. It was one-sided to go lower. Okay? Because again, as long as you know what the framework is, market maker models, buy model, sell model, as long as you're working within that, you're going to take high probability stuff. I know that works well. That's why I trade based off of it. That's why I teach it to you. And that's why I do cool shit like that. Okay? So, sorry. I know it's hard to get through a whole presentation without getting back to the charts. It's just, it's hard to do. It's hard to do. But do more of what works. Obviously, do more of what works. What's the inverse of that? Eliminate what doesn't work. Okay? That's why many years ago, I created that list for you. It was like the top 10 smart money trading rules or something like that. And I just straight up came out and I said, listen, stop longing when there's equal lows. Stop shorting when there's equal highs. There are certain times to do that. I didn't teach it to you back then, but because I kept seeing that. You're longing when there's equal lows and the market goes up, down for your stop loss. Oh, this market sucks. It ain't the market that sucks. Okay? Go look in the mirror. That's who sucks. All right? So if it's not working, stop doing it. All right? It's not complicated. It's not a hard thing to understand. All right? Now, while you're looking at your results, win rate, RR, profit factor, all this stuff, beware of false conclusions. I'm only going to give you a couple. What's a false conclusion? Too small of a sample size. Okay? You looking at 5 or 10 trades is not enough to understand what you're doing or to understand if your system is working. Now, if you took 10 losses in a row, yeah, you might as well just, whatever it is that you're doing, you need to stop. Okay? You need to stop. What is the right sample size? Honestly, I don't know. I'd say at a minimum, probably 50, but I think 100 is more comfortable. I think if you were to look at the low risk buy or the second leg accumulation or distribution of at least 100 different charts, I think that gives you a lot more insight to work with. And the more the merrier after that. Okay? So I don't know what the minimum is, but I'd say at least 50 to 100 sample sizes of a particular trade. Inversion model, mitigation model. You need at least 50 to 100 of them as a beginning set of a sample size. Okay? Beware of false conclusions. You can have a low win rate and still be profitable. That is a thing. You can be 30, 40%, maybe 25% right, meaning winning transaction, and still be profitable. But just know, if your win rate is anywhere from 20 to 45%, you're going to need a nice RR. You're going to need to hold winners to be able to outdo some of those losses. But the inverse is also the same. You can have a high win rate and still be unprofitable. That's probably going to be a risk management issue. But you could have a 60% win rate, still not make money, if your losses are larger than your wins, or if your wins are just so small, that technically your analytics, it's counting it as a win, even though it's not really a win. So that's why you got to be careful with this stuff too. Okay? Because you might see the transaction and go, okay, that's a break even. But your the way that the math works, it's like, okay, even if it was $1, okay, it was $1 win. Your analytics is going to tell you that that was a winning trade, that your win rate is high. But if you made $1 and then you took $100 loss, okay, you're a 50-50 in that. But what is that? You lost $100 and then made $1 over here. So that doesn't really compute. So again, be careful. Have some discernment when looking at this stuff. And I think that's it. Okay. So I'll drop the PDF later if you guys want. But that's what we, need to do. We need to look at our win rate, profit factor, RR, risk percentage, trade frequency, types of trades, type of trader, day of the week, session, which is your time of day, what type of asset you trade, your stop loss size, the target, your time frame alignment or misalignment, your trade duration, and all that good stuff. So again, not the funnest presentation. You know, it's not my favorite. It's probably not your favorite either, but it is good to know. So if you guys got value today, drop a 3 in the chat. I would appreciate it. From now on, you can never tell me, you know, that I didn't tell you to look at your data, that I didn't teach you how to find areas of improvement. You know, but it's work that you have to do. I cannot do the work for you. I can't. I can do a lot for you. I can't do everything for you. But G, that's gonna, again, that's gonna be personal. You know, what's too small for a stop loss or what's too large? That's up to you. Okay. If it's outside your risk parameters, then it's too large. I created a Notion trading journal. I will use this for the dashboard. Yeah, do that. I mean, it'd probably be easier to have a service do that for you, but if you want to do that, then go for it. So, all right, what questions do you guys have? Because there's really not a lot going on here today. I did tweet a little bit earlier, like in here. I think it was in here or down here. I think it was this. I can't actually remember. I think I said in here that if it was up to me, if we were in normal conditions, I would expect that to be a turtle soup. That might have been the first one. Let me check. Let me check. Oh, no, that was the lower one. Oh, to the minute, yeah. That's kind of cool. But nobody can ever time the market, though, right? Nobody can ever time the market. So this could easily go lower, given the news that we have today. Let me check that real quick as well. Oh, 480. Filter it by the red. Okay. So, yes, in about 20 minutes, we are going to have Fed funds rate, and then we're going to have the FOMC press conference 30 minutes after that. So, I don't know if this is true, but I think I saw a post that said this is Powell's last press conference. Is that accurate? Is that accurate? Do you guys know? I really haven't really looked at it, but Tom, you can use the TopSubX platform. You can use, I mean, I've heard a lot of good things about TradeZella. If you want to use them, you can. Is it better to stay beside in trading conditions like today with FOMC? Oh, yeah, absolutely. Absolutely. That's why I said in a normal condition, I'd expect this to be a soup for ES. Nailed that low to the minute. That ain't fucking bad. That's pretty cool. Right? I was wondering if you could review my chart I shared in Discord, but I know it's off topic for this stream. Well, I'll look at it after the stream then. Yeah. So why would this be a soup? Le soup. Because, baby. Because I move these fucking markets, bitch. No, I'm playing. Sorry, I haven't had enough caffeine yet. So Tuesday's low in regular trading hours for ES. We had a low here at 1050. Rallied off of that. Couldn't get past this up candle here. And then continued lower. So now we have a low and a lower low below an old low with resting highs up here. And again, this is, I know it's cut off down here, but this is regular trading hours. Original consolidation, we leave it, back into it, leave it again, bearish until manipulation. So yeah, we do get that low here, and then we get that lower low. And so that lower low, that's why I was saying, okay, in a normal condition, I would expect this to be a soup, which means this would be the V-shaped reversal, the retracement, and then the expansion. It wouldn't do straight line like that, but it would, like, that's the idea of a market maker buy model. So, you know, it's almost like if you listen to what the fuck I was saying yesterday, as long as you're following a framework, you're going to be fine. You know? But yeah, so the low and then the lower low below that is your turtle soup long. Right? So with that, you know, I wouldn't know. Like, I can tell you right now, if there wasn't FOMC, or if I was unaware that there was FOMC, I would have easily longed anywhere in here. Or I might even long right now, just given those down candles here. Like, this would be an easy long for me. Intermediate term low as well. Like, this would be a long stop here, low hanging fruit here, higher objective here, probably even here. There's a massive gap over here. That would be easy. Limited downside, a lot of upside. I would do that easily. You're in it? Oh, Scott, what the fuck? Well, good luck to you. Fed funds rate in 15 minutes. So yeah, have fun with that. Have fun with that. Let me know how that goes. Let me know how that goes. Took a great buy on NQ on the 923 1 minute candle, straight to profit, no drawdown. Let's go. That would actually warrant longs on NQ as well, because that low here was not taken. So V-shaped reversal, retracement, and then expansion. But good grief, look at the last few candles though. Look at this. Wickage. Gross. Pre-FOMC price action. That'll do it. That'll do it. Do you have other videos on frameworks? I do. I have a whole masterclass on it. Let's see. I might need to make that its own playlist at this point. Let me take a gander. The Market Maker Models Masterclass is a members only video. So you'll have to become a member for that one. Dude, I want to say there's got to be more videos on it. Well, there's 1,300 videos. So you can't expect a guy like me to remember every single video off the top of my head. You know what I'm saying? There is quite a lot in there. Quite a lot in here. There was a video I put out 3 weeks ago called the Second Leg Model Framework Smart Money Traders Use. That's a free video. But even if you don't want to learn from my channel specifically, there are actually quite a number of videos on YouTube on market maker models. It's just not everybody actually knows what they're talking about. So you just got to be careful with that. Planning to become a member to see you soon in Discord. Oh, nice. That's good, Tom. We would be glad to have you. What about KJ? Is Miss Jackson here? She asked me to keep the stream open. Keep the chat open, John. Keep it open tomorrow. Okay. I got you, Miss Jackson. Just for you. And she ain't even show up. What type of shit is that? Man. Like, why are you guys like the worst? You know what I mean? Like, why can't y'all be the best? You know? I want y'all to be the best. You guys treat me like trash. Trash. Don't like the stream. Ask me to leave the chat open. Don't show up. Scott's taking trades before FOMC. Man. See, this is why we have personal development, all right? This is why we have book of the month. Gosh. You know, one day. I know, slowly. Scott's banned. We got to get him banned. We got to get him gone. We got to get him gone, man. You know what? I'm going to just keep this tweet on here. I'm going to keep that on here. Just subtle flex. Nothing crazy. Nothing crazy. But I'm sorry, Miss Jackson. But you are banned. Yes. Yes. Nah. KJ and I go way back. Back to the IML days. Back to the IML days. What do we call this? The low-hanging fruit? Let's see if we can get that on the stream. We'll see if we can get that on the stream. 12:50. We're at our 1 p.m. macro, but it'd be hard to trust this macro. FOMC would definitely override the macro. That's a real thing. So I guess we're just chilling for now. I guess we're just chilling. If you guys don't have any questions, we're just cooling. We're just booling. Oh, nice bull flag up here too. See that? Massive run higher. Bull flag. Traded out of it. Back into it and then lower. That's funny. Don't write that down. Don't write that down, baby. All right. How many of you have started the 40 Laws of Power already? How many of you have started it already? Law 4, always say less than necessary. That is a hard one on like for me to be here in the stream. That's a very hard one. I like yapping. I like teaching a lot. So that's a difficult law for me. But when it comes to like certain situations, oh yeah, law number 4. If you ever get pulled over by the police, law number 4. Immediately. Law number 4. "50 pages left in meditations." Oh, that's fine. Felix started Laws of Human Nature. You disgust me. You disgust me. It is a good book, though. The only chapter I didn't like in Laws of Human Nature was the chapter on gender roles. I just thought it was just awkward. I was a few pages into it, and I just skipped it. Went right to the next chapter, and then finished the rest of the book. But depending if you actually read 48 Laws or not this year, I'm thinking about doing Laws of Human Nature for next year, for 2027. There's hella information in there. Oh yeah. Micro expressions. That's a big one in there. Bro, like, I'm telling you, man, Robert Greene is one of the best writers that I can think of. He is very dense. He writes a lot. A lot. There's actually concise versions of his books as well, if you didn't know that. So if you don't like how much he writes, get the concise versions. But the thing is, with Robert, he doesn't use big words. He doesn't use all this colorful language that's hard to interpret. He makes his content so easily digestible. You know what I mean? That's my favorite part. He's not a difficult author. He's a very easy author. It's just a lot of information. When was the last time you traded a news event? I don't know. It's been a while. I mean, I always hold stocks through this type of stuff. It's not really a big deal, but not futures, usually not. Mastery is deep with practicing trading. Yeah. I liked Mastery. The only thing I haven't read from him is The Art of Seduction and the 33 Strategies of War, which I have. I just haven't gotten around to reading it. But his stuff is so good. Seriously. Mastery, I feel like, should be a book like for your late teens, early 20s. Like when you just get into life in general, when you're actually not like a kid anymore and you want to learn, skills and what you want to do in life. Mastery is a wonderful book for that. 48 Laws of Power, I think, it's really great for everybody. But it's really good if you actually have a position. If you're a leader or want to become a leader, or if you just work around terrible people, 48 Laws is good. But again, you just got to be careful, man, because with 48 Laws, if you learn it the wrong way, or if you interpret it the wrong way, you're going to spend a lot of time. If you go too far down the rabbit hole, yeah, you're going to be overthinking and you're going to put yourself in a really bad place mentally and constantly be paranoid and on guard and thinking that everybody's out to get you, and you can actually hurt yourself psychologically with that. So be careful. Finishing a game of tennis, and you were right. The first half was sauce. The second half was mid. I told you. I tried to tell you, Mason. Lots of people think bad things about 48 Laws, but they're just ignorant. Yeah, they comment on books they don't read, which is goober behavior. Absolute atrocious behavior. There's actually a law about that. Like, know who you're dealing with. You don't want to offend the wrong person. Right. So, if you don't know who you're dealing with, be careful what you say. You might offend them. So, if there's a book you haven't read, don't comment on it, because you could be wrong. But again, people are stupid. People don't read. People don't do any personal development. They don't learn to think better or anything. They're just NPCs. So, you know, it's sad to see. All right, so either we moon higher or we rip ass lower. No in between. No in between, chat. This could go either way. I would prefer higher, but I don't have any skin in the game. So even if this does go lower, wouldn't be a big deal. Regular trading hour had clean highs and lows when I left the charts earlier on ES. Yeah, this is regular trading hours. And I was talking about how this was a potential buy model, and that's why I nailed the low to the minute. Which a lot of people still can't do, even though I keep doing it. A lot of people still don't know how to do it. Well, watch me enough and you'll figure it out. Watch me enough and you'll figure it out. Not that that's what it's about, but and they're the same. 3.75. 3.75. All right, well, there's our initial spike. There's our initial reaction. In Q, not a lot going on here. Dow Jones, you could say. Dollar index. Man, we left a bunch of lows back here and some more lows right here. Just came up for that. Ugh. All right, well, I guess I'm going to shut it down here. I don't really have too much else going on for you. Do you think risking 100K a trade is doable in the future for some of us or in general? I mean, 100K is a lot. 100K is a lot of money. Even if you had $1 million trading account, 100K is a 10% risk. So it's a little bit much. So if you're really trying to put on size, like massive size, just pyramid. Keep adding to a winning position. Don't try to go all in at once. Okay, we did this time and time again. Remember, we talked about eBay in here after this big ass day. We talked about those lows getting swept and then going up there. So you can buy below the old lows. Buy after the V-shaped reversal. Buy the retracement. Buy the retracement. Buy the gap. Right? So you're building that position. Instead of going, you know, all in on here. Decent size. Decent size. decent size, and now you're building, and then we get all-time highs, and then it's like, okay, now you can exit. I would not DCA. Okay, DCAing is how you rape your account. You buy it, it goes lower. You buy it, it goes lower. You buy it, it goes, you know, maybe you catch the low, but now your average in is like right here. You know, and if you're wrong about that low, then it keeps going. You know, the market can stay irrational longer than you can stay solvent. So we do the opposite. Observe the masses and do the opposite, right? So if everybody likes to DCA, don't fucking DCA. Do it the other way. Add to a winner, not a loser. It's one of the laws too in 48 laws of trading. But this is going to be no different, even for the smaller time frames. Okay. Whoops. Didn't we have? Let me see. Let me go back to electronic for a second. Didn't we have one of these on Monday? I would not, you know, just go all in and have that as a 100K risk. I wouldn't do that. But I would get in and then add on at the reaccumulation and add on a little bit later before the final move and build that position. I wouldn't just straight up put a 100K risk on it. So, because again, Felix, you have to think about it. Everybody likes to think, you know, what if it goes right? Shit. Okay. You'll make a lot. But what if you're wrong and you lose 100K? Now, 100K in your lifespan, like 100,000, right? In comparison to how much you make in your entire life, that 100K is not going to kill you, right? But losing 100K in one go, think about what that would do to people mentally. Would you be able to handle that mentally? Your life isn't ruined for losing 100K. But you're going to take that massive pain with you when you keep trading. And that may cause a lot of psychological issues. So, you know, everybody ain't built for that, Felix. Everybody ain't built for that. Now, some of these guys who have hundreds of millions and their their stock portfolios are fluctuating $10, $20 million a day, they're used to it. That's nothing to them. But remember, it's relevance. 100K to somebody that's worth 100 million, not a big deal. But 100K to somebody who's worth 200K, 100K even, you know, it's just not. It's not right. So that's what I think. All right. So with that, we may end up trading lower. All right. I'll be wrong then. It's fine. But I don't have anything else for you. So we went over feedback loops. We went over a little bit on market maker models, but, you know, we'll be here same time, same place on Monday, because this is our last free live stream of the week. On Friday the 1st, we will have a member-only live stream here. And, yeah. So, with that, y'all be good, be blessed. Hopefully you got value today. Drop a like on your way out if you did not like it already. I would greatly appreciate that. But, yeah. Ooh, excuse me. Y'all be good, man. I'll see you Monday. Or for the members here, I'll see you Friday.